the appraisal process has become a more contentious affair. It's more difficult to get people that are going to get out there and just be independent. And so every step along the way becomes a little bit more difficult. So I think that that's kind of what's going on, is you don't necessarily have to. I've definitely been on panels where we're both independent. We go out there. A lot of times the appraisers are the most competent people that show up. You know, we go back and forth a little bit. We find agreement and we settle it quickly. In other ones where, you know, they don't want to, it's just everything's a fight, man.
From humble beginnings, Insurance Claim HQ has grown to one of the largest property casualty firms in the country. We didn't do it alone, and you shouldn't either. Every week, we're talking to claims professionals and top experts from all over, all to help you grow your business and make you stronger. Let's level up together. I'm Galen M. Welcome to the Level Up Claims Podcast. Too often, smaller insurance claims get brushed aside, underpaid, delayed, or denied because they're seen as not worth the fight. But for families and business owners, these non-large loss claims can make or break financial stability. Our guest today, Darrick O'Day, founder of Pine Hills Property Claims, has seen firsthand how overlooked claims carry just as much weight as major losses. As a licensed public adjuster and certified appraiser, he's here to unpack the challenges of non-large loss claims, expose the carrier tactics that keep policyholders from getting fair outcomes, and share strategies to level the playing field. Let's welcome my friend and colleague, Darrick O'Day. Darrick, thank you so much for joining us.
Thanks for having me, Galen.
So I'm pumped. You and I have obviously had the opportunity. We've worked together a little bit. We've been to a bunch of conferences. We haven't gotten to do this. So I'm pumped to get to pick your brain, learn more about what's going on. I know you as a very accomplished PA and appraiser, but I can't wait to see what you have to offer today. So we're going to talk about, let me frame it with this. In a world full of large loss discussions, we're going to talk about quote unquote non-large loss claims. So let's start with this. What is a large loss? And do you think we're looking at it the right way as an industry?
Yeah, I mean, I think that when you talk to different people, they're always going to have a different definition of large loss, right? And they're always going to relate that definition to a particular dollar amount or value, $100,000, $250,000, $500,000, maybe $1 million, whatever it is, right? But that's from the perspective of the restorer, of the contractor, of the public adjuster, the attorney, of the insurance company, right? And so what I would like to do and just kind of have a idea on this is maybe challenge the industry a little bit to think about what actually constitutes a large loss, especially if we're there for the policyholder, and the concept of how it affects their livelihood and their lives. Because I know some of the claims I've represented where there's 6 or 7 figure losses, it has a substantially less effect on the actual policyholder than a $20,000 loss or a $30,000 loss.
Yeah, I mean, I have been fortunate enough to represent some commercial claimants who could have just paid for the loss if they needed to. Would not have been a big deal. They wouldn't have even had to take out a loan. And I've represented some homeowner claimants who that 20, 30,000 would be enough for them to question whether they could keep their home.
Absolutely. And I've kind of had this saying for a while now. And, you know, when claims don't get paid, I mean, families don't move back in their homes, businesses don't reopen, kids don't go to college, you know, people don't retire. And those are large losses. I mean, insurance is there to put you back on track when you have a disaster like this. And it's, you know, it's really sad sometimes when that kind of thing occurs. I'm just working on a contents claim right now that I took with another PA that I'm working on. And I mean, I just want to put like 15 grand in this lady's pocket because I got a tenant's policy and, you know, all these expenses are adding up and whatnot. I'm gonna spend a lot of time on it, but I'm doing it because we've gotten it to a certain part and needs a little bit more detail. But I know every dollar, every $100, every $200 is going to make a difference in what they do with their life going forward.
Yeah, I mean, the ripple effect is fascinating, right, on claims, because I agree. I think if we used as a measuring stick the importance of the claim to the policyholder, like, I mean, I don't know. you can almost phone it in if the policyholder doesn't really care what the result is, right? But if the policyholder cares what the result is, like that's the time that I want to see my attorneys and anyone else in the industry, frankly, stepping up and batting as hard as possible for that client if that claim is going to have long-term effects on their life, you know?
Mm-hmm.
We're dealing with Smitty's oil spill cases right now. And if we don't get these properties fixed the right way, these people could have long-term damaging, permanent, even ultimately fatal health effects from being exposed to these chemicals and stuff. It's, you know, and some of these claims are not big, right?
Yeah.
But not getting it fixed the right way, and most of my clients can't afford to do so on their own, could ultimately be what has them meet an early demise. And that's crazy to think about. But you're right, like the ripple effects are wild. So why do you think, and you're the exception here, and there are other exceptions, why do you think our industry doesn't do a good job kind of doubling down on these claims and leaning into them hard?
They're harder claims. Quote unquote smaller claims or claims of lesser dollar amounts are more difficult. It's harder to bring in an expert. It's harder to contest it. It's harder to enforce the policy because there's a diminished return on everything that you do. If you got a $20,000 claim and you need a $15,000 expert and you don't know if you're going to be able to even, you know, get a award or anything out of there, I mean, it's a hard decision to make versus spending $15,000 on a $50,000, $500,000, $200,000 claim. Like, it's a lot easier to do.
Is there a solution to that? Like, I can't really think of what it would be, but is there a way that things could be more affordable for the cheaper claims, and then maybe as a result that gets made up on the bigger claims?
I don't know. I think it's hard. I mean, one of the first advice that I got when I got in the industry, one of the first times I got advice from another PA, and they just kind of said to me, like, hey, look, it takes me the same amount of time to process a $500,000 claim as it does a $35,000 claim. So if I want to make money, I do $500,000 claims, right? And I totally respect that. I mean, we all need the larger claims to stay in business. To get back to your question, I think when states have the opportunity to recover as attorney's fees, maybe recover appraisal fees, like some jurisdictions have, it helps, the claimant in those circumstances. But when you're in jurisdictions that don't have that, it becomes very difficult.
Yeah, I agree. And I guess the only thing I can think is you could fee schedule the experts, right? But then, of course, the experts would come under attack in the courts by the carriers for charging more because it was a bigger claim. But that's the only way to kind of make those things more accessible. But there'd have to be legislation, I guess. What about public adjuster fees and caps? How do you think caps on public adjuster fees affect, quote unquote, smaller claims or, claimants with claims that are seen as smaller?
I don't know. I saw that there was some state that really tried to cap the fee at like $650 for claims under like $30,000 or something like that. And I mean, like, literally, you can basically do nothing for that. So most of the time when the caps are, it reduces the amount of public adjusters that are going to take on those smaller losses. And on most of the claims in the jurisdictions that allow it, I mean, we have a fee scale where we charge a percentage on the first, X, Y, and Z dollars recovered and a lesser percentage on what's excess. But as you know, and I mean, one thing I really appreciate about you guys, you just don't win every single one. And so you have to be able to offset that somehow.
Yeah, you have to. And that's the hardest part, right? Is that I think it causes a ripple effect too in the quality of advocacy that policyholders receive if they're seen as having a smaller claim, right? Because, like, honestly, you're one of the few appraisers or public adjusters that I know that I think are good that will take smaller claims. I'm so glad we're doing video now because I'd have to keep saying quote unquote the whole time. But because people would be like, why do you keep calling them small? But no, you're one of the few I know that I actually would trust. There's a lot of good-hearted, I would say, public adjusters and appraisers that will take smaller claims. Their heart's in the right place, but maybe they're new to the industry, so it's what they have to take, right? Maybe they have some learning to do, and that's okay because we all start somewhere. But you don't exactly want your client learning you don't want your client learning the hard way with the brand new PA, you know?
Right.
So I think those fee caps are a problem. I think they come from a good place. I think some legislator was like, oh, if you're only getting 10 grand for your roof, you should never have to pay more than $500, you know, like I get it.
Absolutely. Yeah, absolutely. And I mean, it's easy to tell a story, you know what I mean? Especially if your contract allows you to recharge on the RCV amount and the insurance company does some crazy depreciation and gives you an ACV policy and, you know, they're paying out 80 cents on the dollar. I mean, it looks like the public adjuster's running away with all the money. You know, it can look like it in that type of an instance. But really it comes down to, you know, sometimes it's over depreciation. You know, sometimes it's just the carrier's not doing as they should. I mean, we have a performance guarantee in our contract. We guarantee to increase the claim by a certain percentage on the public adjuster side, and we don't charge anything.
Wow.
You know, yeah, we do try to make sure that the claimant's in a better financial position. And when I'm reviewing these claims, especially these smaller losses, because, you know, the fees are there, and I mean, they seem substantial. I try to make sure I'm like, did we put them in a better financial position? Because if we didn't, I mean, I'll discuss the fee structure. But if we did, I mean, we've done what we can do. You know, they have more money available to make repairs, and they're in a better position than they were before. Are they exactly where they should be? And, you know, the concept of indemnity, maybe not, but, you know, we can only do what the statutes, what the law, what the resources we have available, you know, allow us to do. Can't do more.
You can't bring him. Look, I don't think ethically, and I'll say this is unpopular, but you just made yourself unpopular by telling everyone that you have a performance guarantee in your contract. So now everyone else is freaking
that's
out.
That's okay.
Yeah. So I'll say the other unpopular thing, which is hiring a public adjuster or an attorney in the vast majority of situations, you will never make it to full indemnity. Yeah. You just won't. Unpopular. Lots of our competitors, sir, will lie about that statement, but it's not true, because if you're doing your job ethically, you shouldn't be getting them more than full indemnity as a PA ever, right?
Yep.
So if they're going to pay your fee, and let's face it, you need to get paid for the work you're doing, they will never be at full indemnity. But they should be better off than they were before they met you.
Yeah, and that's, I mean, that's the standard that I've learned to try to hold ourselves to, is improving their financial situation, you know, and we have to explain that to them. And I explain it when we explain why we have a performance guarantee. I'll just double down on it, right? Because it is a better situation. I mean, if the public adjuster is going to come into the claim, not increase the claim value and still charge a fee, I mean, the policyholder is not in a better position, or at least not yet, you know.
So let's talk about kind of the way these claims play out a little bit, though, because I think we do understand the challenges in our industry. I mean, and really, we've all avoided saying it, but it just comes down to the money. You know, that's really why so many people aren't taking them. But the carriers also don't pay them. And I almost feel like it's a biting their thumb at us, like even more so than the policyholders, because that's just a business decision, right? But then we get involved, and I've had them fight me tooth and nail on a $35,000 roof claim and roll over on a $4 million church claim, sometimes the same carrier. And I almost feel like it's because they're trying to make it financially painful for me. So what are some tactics that they do?
Tactics. I mean, I think that the most difficult tactic to deal with on the side of being a public adjuster is the illogical argument presented by the carrier and the refusal to, you know, acknowledge facts presented. That's the most difficult thing to combat or refute, because there's, you know, you're fighting nothing. You're grasping at air. Like, you have no valid reason to not be paying it. We've presented it in the proper way. You're not giving me anything that says that you shouldn't be paying it, and here we are, and we're still waiting.
Yeah, that's the illogical argument is the hardest one, right? Where they say something and you're like, where does it say that in the policy? And they like either give you some language that doesn't say that, or they refuse to give you any language.
Yeah, or it just doesn't make sense. Like, I mean, we had one we did a while ago. We ended up having to enforce the contract on it. You know, it was asbestos siding. There's step flashing underneath the siding. We had to redeck it. You know, it's a roof with the siding involved. Siding has to be abated in the process of it. It's all tarred. It's, it's stuck. There's no way to get it out. And we're asking carrier like, well, how are we supposed to do it? And like, they have no explanation. You just do it. And I'm like, literally the only possible way that I know of to get this debt flashing out without actually manipulating and disturbing and then, requiring the abatement of the siding is magic, like literal magic. And like, I don't know exactly where to get a magician that can do like real magic, but I'm pretty sure if I can get them, they're going to cost more than it costs to abate the siding to do like real magic and remove it,
Yeah, I would hope that our local sorcerer charges more than it would cost to remove some siding,
You know what I mean? But Galen, the other thing about the losses, and I mean, I think we're starting to see this trend very substantial in the industry right now is, the insurance carriers, I mean, this is the public adjuster hat still, right? Because appraisal is a totally different hat. It's a totally different set of rules. Everything's different, But on that side of it, I think that the carriers are they're bringing everybody on day one. They're bringing their experts. They're bringing their expert reports. They're getting these reports, and the policyholder is at such a substantial disadvantage. And that also makes those smaller claims more difficult because you pretty much have to get an expert, whether you're going through contract enforcement on the appraisal or any other side. Now they have to incur that expense as well. And I think that makes it more difficult. And I wish that there was a way to get more neutral experts involved.
It's also forcing people into more litigation, more lawyers, except on the claims that are small in states where attorney's fees aren't recoverable. A lot of the law firms won't touch the cases. So, we still take a bunch of them, but I know some, colleague firms and competitor firms that just won't. I mean, I know one competitor firm in a market we're in the Midwest where their rule is they won't touch anything under $1 million. That is wild to me. But it's just a rule.
Yep.
It's just what they have. That's how they make money, and that's how they afford yachts. And that's important because that $30,000 roof might pay for a meal on a yacht, but it won't pay for the yacht. So it's just what they do. But let's talk about appraisal, I guess, because I don't want us to run out of time. And that's such an important. So one of the biggest tools we can use on these claims, right?
Yeah.
Is appraisal. For that reason, so many law firms aren't necessarily going to run off and litigate those. So we kind of need to do appraisal. So talk to me about how that plays out. Like, where does appraisal fit into resolution of these smaller claims?
Yeah, I mean, so, I think that the basis of appraisal is alternative dispute resolution process, right? And it's alternative to filing a lawsuit and going through the process of litigation. And so once you hit, a place where you have contract enforcement, I mean, the appraisal is supposed to be less expensive and quicker than going through the full course of litigation and a lawsuit. So, I mean, I think that once ideally, and this is kind of a tricky thing as well, right? Because like I'll have claimants sometime and it's like, can you afford the PA fees and the appraiser fees? You need to go to appraisal. You've substantiated that there's a dispute, but you haven't fully substantiated probably all that's required in the dispute. So in places where you have the ability to do investigation, determine causation, that appraiser can go in there and do that other work to show everything that should be included with that claim under that cause of loss. So I mean, I think that once the claim's been presented to the insurance carrier to some extent or another, the dispute is recognized and agreed to, and you're kind of at that point where you're not going back and forth anymore. I think that's where appraisal kind of would come into play.
Yeah, that makes sense. Yeah, we used to actually on certain types of claims, our law firm would actually just reject the case altogether and refer it to an appraiser and advise that they trigger appraisal right away. And then we went through this phase where we ended up getting the case back because the carrier would deny on the basis that the insured hadn't proven that there was a dispute. Like, seems like a self-proving thing. The insured hired an appraiser, so obviously they're not happy with the money they got, but they're like, no, you need to prove to us you have a dispute. Well, that was just trying to smoke the appraiser out and get the appraiser disqualified by handling the claim as a public adjuster, right? And that's another example of things they do to try to run up the cost. I mean, there's a common theme here, right? By bringing in all these experts doing all these things, they try to run up the cost on the smaller claims because they know that a claimant will pay that on a multi-million-dollar claim. What they don't know is whether the claimant can afford to pay that on a lower dollar value. So we've got our appraiser. We're in appraisal. Our appraiser is going to work on scope. Are there any kind of unique approaches to appraisal for lower dollar value claims?
That's a really good question. I think appraisal, I mean, the rubber always hits the road, right? So I think regardless of the actual dispute, you just want to flush out those facts, as quickly and easily, as easily digestible as possible. So yeah, I mean, I don't think that there is anything. You may look at residential appraisals. You may do like a flat fee, to try to make it, more economical for the policyholder. Or you may look at it like, hey, there's only a roof in contention here. You know what I mean? We're going to just do it at this fee and, call it a day or whatever. I think that's really, really all you can do with it.
Let's talk about speed. As I continue to get no younger whatsoever, I think back to the quote unquote good old days. And I mean, I'm thinking like 2011, 2012 had a lot of claims would go to appraisal and they'd really only come to me if they didn't get paid. Right. But I still kind of know about the life cycle of the claim because often as I mentioned, we'd reject it out of hand, but then I'm going to stay involved. Like if you're my potential client, Darrick, and I'm on the phone, and I tell you, go hire John as your appraiser, like I'm going to check in with you every month or so to see how your claim went. Cause I want to make sure A, if you have a problem, you come back and hire me, and B, I want to make sure my referral didn't blow up in your face. Right.
Right. Yep.
And I would frequently talk to these people. It was a wild 30, 60, maybe 90 days. And appraisal was resolved and there was a check in the client and the policyholder's hand. Like done. I'm out. Easy. Like, I mean, 1 or 2 phone calls right now, even on claims we're involved in, I'm seeing 7, 8, 12, 15, 19 months. So my first question is, what the hell is going on? I think everyone wants to know that at home. What the hell is going on?
I think the answer to that is the appraisal process has become a more contentious affair. It's more difficult to get people that are going to get out there and just be independent. And so every step along the way becomes a little bit more difficult. So I think that's kind of what's going on is you don't necessarily have to. I've definitely been on panels where we're both independent. We go out there. A lot of times the appraisers are the most competent people that show up. We go back and forth a little bit. We find agreement and we settle it quickly. In other ones where, they don't want to, it's just everything's a fight, man.
No, I know.
Yeah.
And I know you've had some. I know we've had some together where like even getting the inspection set up was a fight, which is wild. Like, you can't agree that you need to go look at the property. Come on. Like,
Yeah.
But
yeah. No, definitely. Galen, I wanted to circle back too, because you brought out this point earlier in context of insurance appraisal and trying to smoke out the appraiser. And I thought that was actually really interesting, where the insurance carriers will kind of deny the appraisal or whatever, and they'll try to get the appraiser to start, advocating for the policyholder as opposed to advocating for their independent position in the appraisal. And I do think that's part of it too. And it kind of goes into that whole, independent hat that the appraisers are supposed to be putting on.
Yeah. Yeah. So don't do it. If you're at home, don't do it. It's tempting because they're wrong. And many of you are also licensed as public adjusters. So know they're wrong, but it is a trick.
Once you go start arguing and advocating for the policyholder's right to appraisal, it's like, why would you care if you're independent? Like, I'm here to appraise when we're ready to appraise. Let me know.
Which, I got to say, as an aside, I think that's silly because you actually can advocate for the right to appraisal and still be independent. Why? Because you're the appraiser and you're only going to get paid if the appraisal happens. So you're more interested in it happening. You're not interested in the outcome. You're interested in it happening so you can earn a living.
That's fair. That's fair. I still wouldn't advocate for them, but that's fair.
I wouldn't. No. To be clear, my advice is the same. Don't get involved. But if you have already gotten involved, that should be your obvious response is no, the only thing I'm interested in is being able to do my job. And you're currently preventing me from doing my job. So I would like you to get out of the way so I can do my job. Please appoint another appraiser so I can work with someone amicably to reach a resolution to this claim. But don't go say that. That's only if you need to cover yourself because you already said something.
Right.
But it is a crazy world we live in, sir.
Yeah.
All right, go ahead.
Well, I was going to say too, with appraisal, another thing is that obviously, as you know, appraisals are becoming more and more litigated. After the award, before the panel, motion to compel, all these types of different things going on. So I think that also kind of causes additional delays. And you would think, though, that the more that states weigh in and provide opinions on things, that it would actually accelerate the process. Because there's a lot of jurisdictions where you're appraising and it's just really the Wild West. And there's other ones where you have interpretations and you kind of think that you have direction. But not everything's, spoken to yet. So you're going to definitely have people making their interpretations.
Yeah, and then you got to be careful on the dollar value too, because sometimes that's what they want to do is litigate the appraisal. But if you're the appraiser, all you can do is your job. So do your job. Let the lawyer sort it out. Look, if it's a small $35,000, $40,000 award and the carrier doesn't pay it, the policyholder is just going to have to hire an attorney if they want to realize that income. And they need to, unless they're going to pay the appraiser out of pocket. And I hate that.
And then back into the context of these lower dollar appraisals, especially in these, appraisal policies that have these, different types of exclusions like cosmetic damage and these different things like that. I mean, now the policyholder has a dispute with the insurance company. They decide to invoke the appraisal. They may have to get an expert. They have to pay for an appraiser. They may have to pay for an umpire. And then they may still have to pay out of pocket to determine what that cosmetic damage exclusion is, and then potentially pay for another expert to opine to what those what that definition is, and if that that damage meets that definition or not. It almost puts indemnity like completely out of hands on, or completely out of reach on smaller dollar amount losses.
Yeah. And you have to make a strategy decision as to what it's worth spending on, especially if you're in a state where attorney's fees aren't recoverable and costs aren't recoverable. If you're in a state where those things are recoverable, I'd say you backload a bunch of that for the litigation, because those things are recoverable. But otherwise, we've made a mess of this industry, haven't we? All of us, not us, really the carriers, but it's a mess.
Yeah, I mean, it's definitely getting difficult, but I mean, that's kind of the conversation you end up having with the policyholder now. It's like, oh, look, like I got one I just saw yesterday. I'm like, I was thinking, oh yeah, I heard about it. Like, yeah, it sounds like it's going to be a good fit for appraisal. I, get the stuff to kind of take a quick peek at it. I'm like, okay, you have this exclusion, and then, the carrier called these window wraps, or those are actually windows. And, it's just like, okay, what's the proper direction for this? And that's kind of where, maybe they need to have representation, just to get into the appraisal, but then they're just incurring additional fees. Now you need a PA, you need an attorney, you need an appraiser, and you still have no guarantees.
But sometimes it's unavoidable just to keep from just because you got to unwind the mess that was created before you got there. And
absolutely,
sometimes you just need help to do it. Darrick, you've been amazing. You've been great with your time.
Thanks,
Before you go, though, I have to ask you, I've never gotten this from you ever. What does it mean to you to level up?
Okay. So I used to have this tabletop book, and it was called Moving Forward, Keeping Still. And it was all these different little parables in it, right? And I used to think a lot about that. Like, what does it mean to move forward while keeping still? And how do you actually do that? And like, Galen, let's say that you're out on a little camping trip or something like that, and you're going to a specific destination, and I meet you in your campground, and I show you a map. And that map has all these different shortcuts and these different avenues and different paths to getting there. You've actually moved closer to your destination without actually taking a step. You've moved forward while keeping still. So to me, that's what leveling up is. It opens up the options and the opportunities that you have available to you and allows you to get there, more directly or more quickly.
I love that. Darrick, thank you so much for joining us today. I'd like to thank Darrick O'Day for joining us on the podcast. Moving forward, keeping still. I think that concept that he's espousing really talks about how learning more, having more knowledge, having more tools, and having more resources available to you makes your path shorter and easier, even if it feels like you're not necessarily advancing. And that's exactly what I think he's using to handle these non-large loss claims that we talk about. These claims that are so important, that affect people's lives and have a real ripple effect across our community and across everyone we care about. So I understand large loss claims are great, they're awesome, and they're profitable. But maybe look around your community and see if you can't help out some people that really need it. Because at the end of the day, isn't that why we're all here? Follow us on Apple, Spotify, or your favorite podcast player.